This is Nightly Business Report with Tyler Matheson and Susie Guerin.
Markets around the world sell off as investors worry whether a bank bailout plan for Cyprus means more trouble in Europe's financial system. We'll get answers from PIMCO's Mohamed El-Erian.
Nobel laureate Paul Krugman diagnoses America's biggest economic challenges.
And builders say demand for homes is up, but so are costs, and buildable land is scarce. Why home builders aren't as confident as they've been. We have that and more starting right now. Good evening, everyone. Tyler, you know, it's just amazing how one small country in the Mediterranean can create such big problems for the rest of the world.
This may be a tiny black swan, but it can still bite. Stock markets around the world wobbled today in response to a plan floated over the weekend to bail out the troubled banks of Cyprus. Part of the proposal now being reworked would take money from depositors to pay for the rescue. Cyprus, a tiny Eurozone island nation, has an economy the size of Vermont's, but a banking sector crippled by the Greek financial crisis with assets 8 times as great as the country's GDP, and therein lies the rub. The reemergence of Europe's financial woes comes as no surprise to many analysts. Listen to what former Fed Chairman Alan Greenspan told NBR Friday.
Europe has been hanging over the American markets now for quite a while. And the removal of that risk, at least temporarily, and I think it is only temporary, has enabled the underlying forces of the market to begin to come into vision.
And today, the clearer vision that Greenspan referred to was clouded by Cyprus. Sue Herrera has our report on why Cyprus matters.
Cyprus is a small island with an even smaller economy. But right now, the world's biggest markets are closely watching what happens in the tiny Mediterranean nation.
It's a tiny nation and it is a tiny banking system to some extent. The reason why we care about it isn't, of course, Cyprus, just like it wasn't Greece. It's what it means for the bigger nations in Europe if they follow and go down the same path.
Banking is a huge part of Cyprus's economy, and it's a mess. If it fails, the country will probably fail too, and the European Union will not let the country fail. But here's the rub. The biggest customers of banks in Cyprus are wealthy Russians.
German taxpayers don't want to bail out the depositors in Cyprus because they're mainly Russians, and I think that's really what the issue is.
So European finance ministers say they will give Cyprus 10 billion euros, but the country is on the hook for the other 7 billion its banks need, and they don't have it. So they're going to charge bank depositors a fee. Even small investors who thought their savings were insured will take a hit. And the prospect of any government taking money from the private savings of its citizens has investors everywhere nervous.
This was a necessary step, but a single shot at the problem, and that from now on they can be very confident that nothing will happen to their savings.
The government says that this is just a one-time hit, and depositors are going to be compensated with bank shares. But with the stock market down some 60%, those shares are essentially worthless. The banks are closed now, and they won't open again until after Parliament votes on the bailout measure. But all across Cyprus, people are waiting in lines at ATMs to withdraw money from their accounts. And governments all over Europe are worried that their citizens might also take their savings out of local banks and cause a run on the banks of Europe. A banking panic could plunge the world economy back into recession. And that's why even the most seasoned Wall Street veterans are closely watching what happens on this tiny island in the Mediterranean. For Nightly Business Report, I'm Sue Herrera.
So what does the crisis in Cyprus mean for the U.S. economy, the markets, and American investors? For some answers, we turn to Mohamed El-Erian. He's the CEO of PIMCO, the world's largest bond fund. When I talked with him a short while ago, I asked him if the situation in Cyprus is a unique, isolated problem, or is it a serious issue for the U.S.?
It is mainly unique to Europe and to Cyprus in the sense that Cyprus has a very large banking system and there's no other way they can raise money. The reason why it's relevant to us, Susie, it's because it is disrupting a certain conventional wisdom, which is that deposits are sacred. Insured deposits are sacred. And what the Europeans decided this weekend is that that's no longer the case.
Well, absolutely, Mohamed. I mean, that's what a lot of people here were thinking about. It raises questions that whether your bank deposits, can you trust bank insurance, even though this problem is all the way in Cyprus? What can you tell people at home tonight?
I would say there's no fear in the case of the United States. There is no fear that the FDIC insurance is not going to apply. I think that what's happening in Cyprus is very special to Cyprus. However, we may feel the spillover in a different way. What's going to happen now is that unless they fix the blunders, as they call them, the mistakes, these are the words that are being used right now within Europe, unless they fix that, there's a chance that there will be an outflow of deposits in Cyprus when the banks reopen on Thursday.
So what impact would that have on the U.S.? What impact does all of this stuff that's going on in Europe and in Cyprus have on the U.S. economic recovery? Could it derail it?
I don't think it derails it. I think it's an additional headwind. So Europe is, after all, the biggest economic zone. So the sicker Europe gets, the more headwinds we get. Now, the good news, and this is really important for us, is that we have internally some endogenous healing. We are getting better as an economy. And secondly, the Federal Reserve is very committed right now to buying time for our politicians to get their act together. So I think that this is a headwind, but I do not see it as something that would derail our recovery.
What about the global economy? What about the global financial system? What risk is there to that because of this Cyprus situation? This is a big worry for so many people.
So the risk scenario, and I stress it's a risk scenario, not a baseline, is that the Cypriots are so upset that you get both political disorder and social unrest. And that increases the chance of Cyprus exiting the Eurozone. And if they exit the Eurozone, you reopen all these questions that were put aside in July by the very aggressive intervention of the European Central Bank. So that is the risk, that unless they find a solution and unless they exempt the small savers from this levy, that you may get social disorder and political disorder.
Let's bring it here to the U.S. and the U.S. stock market. We've had a nice market rally. Could this situation disrupt the market rally here? And for American investors, is this a time, an opportunity to get in, or is there more turmoil ahead? What do you think?
Well, so far we've shrugged off this element for three reasons. One is the Europeans have realized that they've made a mistake and they're trying to find a way out. It's not going to be easy, but they're trying. Second, there's the view that our markets will become more attractive because Europe once again has a question mark. And third, let's not forget what's going well here. So the reason why we in the United States have shrugged off the Cyprus news today is because of these things. So I would say that, but do not forget that we are in an overbought situation. So we have come a very long way, well beyond the fundamentals. So I wouldn't say this is a buying opportunity. I say this is a reminder that we are subject to these political shocks from outside.
Mohamed El-Erian of PIMCO. Well, the Cyprus news and worries about a broader spillover throughout Europe sent world markets down sharply, and U.S. stocks were not immune, especially in early trading. But as Mr. El-Erian just pointed out, they recouped nearly half of their losses by the end of today's session. After being down as much as 110 points, the Dow finished the day 62 points lower, closing at 14,452. NASDAQ also under pressure, down 11 points. The S&P 500 down 8, now 13 points shy of its all-time closing high.
Looking at the U.S. economy, home builder confidence fell more than expected and for the third straight month. The National Association of Home Builders said its confidence index fell 2 points to 44. Readings below 50 suggest negative sentiment about the housing market. Builders say they're concerned about meeting increased demand for new homes because of bottlenecks in the system, not enough workers and building supplies. With us now to talk about the outlook, Brian Westbury. He's chief economist of First Trust Advisors. So, Brian, is this a case of an abundance of issues? Is that what builders are telling us?
Yeah, you know, excuse me, Susie, but you know, when after a surgery, you know, it takes some time before everything starts to work right again. And I think that's kind of what housing is going through right now. We had massive layoffs. We literally shut down the entire industry. I mean, almost. And so getting it started up again, I think builders are surprised by the strength of sales. And what's happening now is that there are bottlenecks appearing, and there's a shortage of homes on the market. And this is creating kind of good difficulties, if you will, for builders and for the housing market. It's a shortage of homes on the market in many, many areas of the economy.
So, Brian, builders are a little less confident than they were a month before, but maybe for technical reasons. Should homeowners be, or people who are out in the market today, be less confident about buying a house? Or do you see a pretty good year ahead?
Oh, I see a great year ahead. Builders will catch up eventually. You know, last year I think housing starts were up almost 30%. That's a huge gain, and they're just having a hard time catching up. We had lots of immigrant workers. Many of them emigrated back out of the United States, or they've moved to different areas of the economy. And so what's happening here is we just have a little problem restarting. You know, one of the other areas that we can see this happening in is lumber. Lumber prices now. The price of lumber is back up to where it was in 2005 at the height of the boom, and we're building about a third of the houses that we were building then. The reason lumber prices are up so much is that we're not producing as much lumber, and yet demand is taking off.
Let me ask you this, Brian. The other thing that's going up are the rates on mortgages. We've seen on the 30-year, it's up to like 3.6+%. You know, not a lot still, but as mortgage rates go up, what is that going to do to the housing recovery? Could it stall it out?
You know, yeah, it could, Susie, if rates go up significantly more. But we had a boom in housing back in the early 2000s, back in the late 1990s, with mortgage rates of 6 or 7 or 8%. And you know, as long as the economy is doing well, as long as wages are rising, and I know they're not surging today, as long as we're adding jobs, I don't believe interest rates anywhere near current levels are going to put a dent in the housing market.
Okay, a nice upbeat way to end our conversation. Thanks a lot. Brian Westbury, Chief Economist at First Trust Advisors. And we want to get a jump on the spring selling season. So for the rest of this week, we'll be taking an in-depth look at housing. Diana Olick kicks things off from one of the hardest hit, the Miami condo market, where things are starting to boom again.
And coming up, we're going to focus on Washington and the stumbling blocks in the deal to curtail the so-called sequester, those government spending cuts. But first, a look at how the overseas markets fared today.
On Wall Street today, more red than green in the stock market and some losses in the oil patch as well. And that's where we begin our market focus tonight. Schlumberger, the oil field services supplier, warned investors that fewer rigs were going back online than expected. The company's CEO said he expects negative pricing pressure in several areas. Looking at the stock, Schlumberger down almost 4%. Other drillers also got hit. Helmerich and Payne tumbling 5.5%. Neighbors and Halliburton down as well. Leading the S&P gainers today, JCPenney. The retailer got a positive report from analyst Brian Nagel at Oppenheimer because of the new Joe Fresh shop within a store concept, but he did say that Penny still needs to work through its problems. Investors bought on the positives, pushing JCPenney up more than 6% to $16.44.
And AstraZeneca cutting 1,200 jobs at its Wilmington, Delaware site as it starts a research and development reorganization. The cuts come weeks after the company reported a big drop in revenue for 2012 and forecast continuing difficulties with competition from generic drugs. Shares of AstraZeneca traded in New York were down slightly on the day at $46.18. And after 6 years on the job, Electronic Arts CEO John Riccitiello offered his resignation. During his tenure, the stock dropped more than 60%. Riccitiello said in a memo that revenue and earnings for the current quarter would be at the low end of its earlier guidance, and he was accountable for it. Shares were down at the close and then rose after hours.
Moving now from Wall Street to Washington, this week lawmakers are working toward a measure that'll keep the government up and running past next Wednesday. That's when current funding runs out. But the real budget battle over long-term spending cuts continues. John Harwood has more.
Republicans and Democrats in Washington are still fighting over taxes and spending, but they've agreed to keep the fight under control. The House has already passed a bill to keep the government running past the end of this month. Now the Senate's preparing to do the same thing. And there, the two parties aren't far apart on the details.
We have condensed the number of amendments that are being talked about seriously. I commend them and their staffs for all their efforts. I've spoken to both of them this morning. They have not yet, though, reached an agreement. I think we are getting close.
But the gap remains huge on a long-term plan for bringing government spending and revenue in line. Democrats say they're willing to reduce outlays for the massive Social Security and Medicare entitlement programs, but only if Republicans agree to additional tax hikes. And just yesterday, Speaker John Boehner said the House's answer to that is no.
The president got his tax hikes on January the 1st. The talk about raising revenue is over. It's time to deal with the spending problem.
Still, the two chambers at least have a way of talking about their differences, not with President Obama, but with each other. Work on the contrasting House and Senate budget plans continues this week. For a Nightly Business Report, I'm John Harwood on Capitol Hill.
Nobel Prize-winning economist Paul Krugman has been outspoken about what he thinks policymakers should do about the federal debt and deficit. I asked him about that when we spoke recently, but I began by getting him to rate the U.S. economy on a scale of 1 to 10, with 10 being very strong.
I think it's trying to be a 6, but the government, the sequester and generally the government doing the wrong thing might be pulling it back to a 4. But look, we're definitely off the bottom, and the economy is trying to recover.
Are you concerned? I spoke last week with former Fed Chairman Alan Greenspan, who said that with respect to the sequester, that rising asset prices, both in stocks and in housing, may in part offset the otherwise deleterious effects of the federal spending cuts. Are you in that camp at all?
Not especially. I mean, there's a little bit coming from stocks, but the main thing is housing is coming back because we've built very few houses for a long time now. Household debt has been coming down relative to income, so balance sheets are in better shape. So we have, in a way, we've been down so long that there's no place to go but up, and so the private sector is starting to recover.
If the economy is, as you seem to characterize it, lukewarm but growing a little bit, why are stock prices as high as they are today, and do you think they can continue to move up from these levels?
Well, there's two things. Although the economy is only lukewarm, profits have done very, very well. We've had, for whatever reason, we've had a major shift of income away from labor to capital, so profits are very high. And the other thing is that interest rates are still very low, so money has to go someplace, and it bids up stock prices. I don't think stock prices are obviously unreasonable. I don't know, whether it's exactly right or not, but it doesn't look like it's a crazy number right now.
As you look at, we finished obviously 2.5 months of the year now. As you look off into the future for the rest of this year, how do you think the U.S. economy is going to perform, and similarly for stocks? How do you think they'll do?
I have no idea whatsoever on stocks. That's not my game. I think the U.S. economy, as I say, it's trying to grow, but a lot depends upon what's going to happen in Washington. Does the sequester continue? Do we have, do we have another confrontation over the debt ceiling? So at this point, it is dysfunctional politics getting in the way of an economy that is gradually getting its act back together.
Does the economy, in terms of federal finances, need what's been characterized as a grand bargain? And do you think it's possible? I was listening to a political analyst earlier this week who said, if a grand bargain means that somebody has to, that each side has to sign on to raising taxes and cutting entitlements, he knew of no politician who would buy that bargain.
Well, yeah, I don't think it's likely, but I wouldn't put it that way. I would have said that the division between the parties is just too large, that we have Republicans basically have not acknowledged that they lost the election, and that's the problem. But look, it is not urgent. The Congressional Budget Office debt projections show pretty much stable U.S. indebtedness for the next 10 years. They do not show anything that looks like a crisis. So we are, we have long run problems, but not anything that has to be dealt with this year or 5 years from now or even 7 years from now.
Are you worried about the level of consumer debt? Consumers have pared their debt, but it's still much higher than it was a decade and a half ago.
Yeah, well, but consumers are continuing to pare it back some. I mean, I think that's one of the major reasons we've had such a slow recovery, but I think it's on the right trajectory.
If you look at the biggest challenges that you foresee facing the U.S. economy over, let's say, the next decade, give me three that come top of mind.
Well, first of all, we're part of a world. So we're not alone, and Europe is really a mess, and I do worry about various kinds of blowback from the European situation. So that's an economic, political problem. I worry about our own politics. We have, it's one thing. I don't think we need a grand bargain, but we do need a functioning government, and I'm not sure that we have that. And finally, I think the environmental issues. We've been pretending that they're not there. We've been ignoring them, but they're going to get more and more visible, and we really should have been panicking about them long before now. And I think by the time 10 years are up, it will become undeniable that we really should be scared and acting on environmental issues.
Professor Krugman, thank you very much for joining us tonight.
Thank you.
You can always count on Krugman for a fresh perspective on the world economy. Well, let's take a look now at treasuries, currencies, and commodities and how they did today.
One upcoming movie that hopes to join that same list of box office winners someday is a film based on the canceled TV series Veronica Mars. And the funding needed to produce the movie is being raised in a most unusual way. Julia Borston takes a look.
Veronica Mars drew a cult following before the show was canceled in 2007. Now diehard fans are rushing to spend money to turn the TV show into a movie.
When are we going to do this whole Veronica Mars movie, huh?
I don't know. You got a couple of $1 million lying around?
The show's producer Rob Thomas and actress Kristen Bell are leveraging the power of crowdfunding, raising more than $3.6 million from over 55,000 backers, setting a new record for Kickstarter, a 4-year-old platform that helps people fund creative projects. It's raised over $500 million for more than 3 million people.
You can say to your friends that you've actually given money to help get this movie on the big screen, or you've given money to help get this concert or record off the ground. And for a true fan, that's a huge thing to be able to do.
In less than 24 hours, Thomas and Bell reached their goal of $2 million, demonstrating the demand Warner Brothers wanted to see before it would agree to make the film. They generated that massive demand from passionate fans, not by offering a return on investment, but with a variety of rewards, everything from $10 for a copy of the script to $10,000 for a speaking role in the film. 300 people spent $1,000 for tickets to a premiere.
This is a big win, not just for fans, but also for Warner Brothers, proving the power of a devoted fan base. And it could be a turning point for how Hollywood thinks about financing and pricing films.
This Kickstarter campaign demonstrates that people will pay more than a $10 movie ticket to see a film, and it also gauges audience interest.
A movie studio can combine with the filmmaker and say, hey, we don't know if there's an audience for this movie. Let's test that market. Let's test that hypothesis.
Now all the studios are watching to see how Veronica Mars performs. It's expected to start shooting this summer and hit theaters next year. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Well, just like Hollywood studios, colleges have become pretty good at making money in different ways. And with the NCAA men's basketball tournament tipping off this week, the schools involved will all get a piece of the pie. But one school is cashing in on its basketball program at a far greater rate than all the others. Brian Shackman tells us which university is already a big winner.
It goes by many names: March Madness, the Big Dance, or more formally known as the NCAA Men's Basketball Tournament. Every year, schools from around the country compete for the national title. This year's top overall seed is the University of Louisville, and they also happen to be the #1 in another aspect of the game: money.
Louisville is the most profitable team in college basketball.
From basketball alone, Louisville takes in more than $40 million, with huge margins, profiting anywhere from $23 to $28 million.
That's largely due to the new KFC Yum Center that's a few years old. They also get $20 million in donations from alumni, which is larger than most schools' overall athletic budgets in basketball.
In the profit game, the Cardinals beat out some legendary programs like Kansas, North Carolina, Kentucky, and Indiana. They make the bulk of the profit through fundraising, but the team also draws 20,000 fans a game at a premium that is more NBA-like than NCAA.
The average ticket price for University of Louisville basketball is $35, which doesn't seem that expensive, but again, it's more expensive than the average ticket price for about 7 NBA teams.
Also like pro basketball, and unlike most NCAA programs, they sell beer. And concessions add another $500,000 to the bottom line. For Nightly Business Report, I'm Brian Shackman.
And coming up tomorrow, more information on housing when we get February housing starts. And the Federal Reserve meets for a 2-day policy meeting on interest rates. And Tyler, I'm going to be interviewing the CEO of Coca-Cola and talking to him about how his business is doing and how are things going overseas for him.
It'll be very interesting to see what he says about Europe, not specifically about Cyprus, which must be 1/10 of 1/10 of 1% of his business. But Europe overall is a pretty significant part of Coca-Cola's business. That's it for Nightly Business Report. I'm Tyler Matheson. Thanks so much for watching.
And I'm Susie Garib. Have a great evening, everyone. And Tyler and I will see you right back here tomorrow night. I'm Susie Garib with the Nightly Business Report News Brief. Markets here in the U.S. and around the world sold off on renewed concerns about the European debt crisis. That's after a controversial bank bailout plan was proposed for Cyprus, which includes a one-time seizure of up to 10% of people's savings accounts. But U.S. stocks recouped nearly half of their early losses by the end of today's session, down as much as 110 points after the open. The Dow ended the day 62 points lower, closing at 14,452. The Nasdaq was down 11 points. The S&P 500 lost 8 and is now 13 points short of its all-time closing high. And home builder sentiment for March was lower for the third straight month. Builders say they don't have enough open land or qualified workers to keep up with home buyer demand. And be sure to tune into Nightly Business Report right here on your public television station.